Hi guys, this is my trading journal for Wednesday the 24th of Feb. The last 24 to 48 hours have been crazy and volatile in the equity markets. The market sold off big time yesterday, and the tech sector was the sector that led the market down. I believe Nasdaq was down by about over 2.5%, close to 3%. But today is another day. The markets all closed higher, and the markets appear to be in recovery mode or repair mode. And the Dow in particular, excuse me, the Dow closed at a record high today. And if you look at the heat map, you can see it's largely green, apart from the large cap tech companies, Amazon, Facebook, and Apple. The Nasdaq managed to close at a record high. Nasdaq was up by 1%, S&P 500 was up by 1.14%, and the Russell was the outlier on the day in terms of performance. It was up by 2.38%. So over the past couple of weeks or so, there has been a gradual rotation from growth stocks into value stocks, particularly the technology names that have quite high multiples. And the catalyst for this rotation appears to be the steepening of the yield curve. So when rates are very low, the tech stocks or the growth stocks expand into quite high multiples. And that's simply because the risk-free rate or the rate on US Treasuries are quite low. But as the yield curve begins to steepen, those lofty valuations are called into question. And yesterday, the yield on the 10-year US Treasury went as high as 1.43. And given that it went that high, the multiples on the growth ones, on the growth stocks, had to come down to compensate for the rise in yields, or they had to be discounted by the risk-free rate, which is the US Treasury rate. And then yesterday, the Fed chairman had a press conference, and he reiterated that the Fed's policy has not changed, and rates are not going to be raised anytime soon. And that seemed to carve the nerves of the tech sector a little bit. But the rotation still continues, and no one knows if this is just a pause in the tech sector before it takes another leg down, or if it's going to consolidate around here. And some commentators are even calling some of the growth stocks the reopen stocks. And that's because many of them have suffered largely due to the pandemic and the shutdown. Disney is one of those stocks, and it closed at an all-time high today. So no one has been able to visit any parks, even though Disney also benefited from the stay-at-home with a digital offering. But it's what I think about 40% of Disney's revenue comes from their theme parks, and that has been largely shut down for over a year. And it hit an all-time high today. So that's the rotation from growth into value. The VIX rallied big time yesterday when the market was down, but it gave most of it back today. The VIX was down today by 7.5% to close at 2134. There are now 23 days until the March contract expires, and there are 51 days for the April contract to expire. In terms of trade ideas, I had no new trade ideas. Moving on to my open positions, I have 3 open positions. All the short strikes in all my 3 positions are currently in the money. And if there was ever a good time for my short strikes to go in the money, it would be as close as possible to 30 days until expiry. If you recall the ZYME position from the February expiry, it was out of the money for most of the duration of the trade, and then with less than a couple of weeks to go, it went in the money. In this case, there are 3 weeks to go, and there is reasonable time for the underlies to make up some positive deltas and give me an opportunity to adjust the positions. The first position I'm going to look at is XL. XL sold at 17.5, 12.5 put spread. So XL closed today at 14.64. My 17.5 put is in the money. On this one, I am waiting for, if I can get this, I am waiting for XL to move up a bit and fill this gap around here. So this is yesterday's price action, which was quite good. Today was a non-event, nothing happened really, and then you got this massive gap around here. So I'm waiting for some movement to the upside to around 1670. So the low of this candle is 1670, and that should boost the premium on the 20 core, and I'll be able to adjust it by selling a core spread. So that's what I'm waiting for on this one, this area to be filled, and then I'll be able to sell a core around here. So that's XL. The next one is GNOG. On this one I sold the 17.5, 12.5 put spread as well. GNOG closed at 15.28. My short 17.5 put is also in the money. On this one I'm waiting for some movement up to around 1670. Up to around here. That should boost the premium on the 20 call as well once it moves around here. Price action yesterday was brilliant. Today was okay-ish. It didn't really follow through from yesterday, but then it did close higher than yesterday, so it's not that bad. The third one, MSTR. On this one I sold the 820, 810 put spread. MSTR closed at 817.69. My short 820 put is in the money, and on this one the price action yesterday, that was the sell-off. It was ugly, and then lovely candle here today, closed at the high. There is a gap here and here. I'm waiting for MSTR to get to 865, which is the low of this candle. That will fill both gaps, I think. And then I'll be looking to sell the 1100 core, or around the 1100. The price action in MSTR is quite encouraging compared to the other two, and I have a feeling this is the position that will be adjusted first. And that takes me on to my watch list. On my watch list I have MSTR, Baidu, ARKG, QCLN, BLOK, ARKK, GNOG, XL, BEKE, and SI, and all of them have pretty high implied volatility, over 55, and no earnings due over the next 30 days. And that brings me to the end of my journal for today. Thank you for listening. If you have any questions, drop them in the forum and I shall answer them. Thank you and goodbye.